Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network, and an interesting week we have had. As we record this, it was a nice bullish Wednesday as we get ready to head into two very shortened holiday weeks, but the biggest dominant factor has been what the weather is and what it could be as we head into the weekend. We'll talk about what happened in the cash and the recovery, of course, we've seen in the boxes. Brad Kooima joins us this week with Kooima and Varlick out of Sioux Center, Iowa. So I think first and foremost, it is all about this weather.
Well, I think that certainly is the dominating influence, Susan, without a doubt. Thanks for having me on. I always enjoy this, of course, and what a great timing for you for a change.
I tried.
Yeah, for sure. We get to talk on a day when the lead month, or at least the mostly heavily traded month, is up over $2. I haven't been able to say that in quite a while. Yeah. Let's see. I think let's start with what your comment was. I think it is about the weather. At least it was today. Where were they yesterday, one might say, to the old crippled up fundamentalist here that's been at this for a while. I was asked that question a lot yesterday with guys saying, well, geez, how come we're lower? Don't these people know that it's going to be, we're going to have 50 below wind chills here. I don't know what it's like where you're at. Certainly there's areas that have more snow than we do, but those areas particularly, I have friends of mine, I background some cattle in central South Dakota, and they absolutely got creamed on that last storm. One of the guys that I feed at is 36 inches of snow, if you can imagine, and then it blows for 4 straight days. Cattle not getting fed for a couple of days at a time. Cattle walking up over top of the fences and all the rest. So anyway, any cattleman as probably can relate to those stories, but it was surprising like yesterday that we didn't get any lift out of the futures. I think a little bit, Susan, what's happening here is that you need to adapt to the different changing markets, says the 65-year-old guy, or you get run over. And I recognize that the market's not the old market. It isn't one that I grew up on. It certainly isn't the market that was prior to the pit closing in particular. And I think referencing that is because I'm doing that because back then, in 2015 is when it closed. But then the CME was the hub of all the information that flowed. Okay. That's where the information went to, and where it got disseminated out. Much more fundamental traders were engaged in the marketplace then, and people that understood that, well, if we have those kind of conditions, cattle that are outside are likely going to be lucky to hold their own, and they won't. They'll lose a bunch of weight, and they'll also likely not get it back if they're in a spot where they're almost fat, right? Or fat. I know that most old fundamental traders know it, but you got a marketplace anymore where an awful lot of our traders are sitting in front of a computer with an algorithm that's built to tell them, well, if the blue line crosses the red line, then you got to do this, right? And I'm not making fun of them, but I'm recognizing that, the market has changed. But I'd like to think, Susan, at the end of the day, that once in a great while, it does pay to know something about the fundamentals. And I would say that today is a bit of indication for us today.
So we look at a market that most of this weather is going to Wednesday evening into Thursday when they're talking those 40, 50 below wind chills like we're going to have here. Is a market going to just wait and see what Friday brings? And then obviously we have Monday off for a holiday. So might not be a big deal until Tuesday. And by Tuesday, is it going to be, well, it's here and gone?
Maybe. I wondered about that too. Where, the long weekend happened to hit, I think that's what the shorts are all hoping, that maybe by the time we get back next week, that this will blow over. I'm kind of in the camp so the only bid I heard today was out of one of the regionals at 157, which was steady with what they did last week, and very, very, very limited. So let's say the market is 157. Well, if you would look traditionally at where February cattle futures would be compared to cash, traditionally February cattle futures, if we don't have COVID, if we don't have all these other stuff, where people are afraid to be long, February cattle ought to carry a weather premium. They always used to. Because always the fear was, well, what if we have a tough winter and these cattle lose 50, 75 pounds? We have some death loss to get backed up, blah, blah, blah. And now we've got nothing, So to me, it gives you a little more upward mobility. I don't know what you could have done today to act better. We made new contract highs on everything, and the front month was the strongest month. I would think this thing would follow through some. And maybe when you get to next week, maybe we're due for a correction. I don't think we're near done going myself. And you've asked me this question before. I think somewhere in the middle 160s is where fib cattle are headed, with or without the weather. But the weather's going to get us there quicker, of course.
Is there any concerns for backup in the freezers for these proteins?
I think there's more of a concern about if the packer gets, Monday the packer did what he's been threatening to do for a while, and that is he actually did cut kill. There was 3 plants that were dark on Monday. We only killed 100,000 cattle. And the trade didn't like that. That's, I think, why we were lower yesterday. My feeling is if they would do that for a sustained period. Now they've done quite a bit. Box beef is up about what $18-19 from 10 days ago. So I think their margins are much improved from where it was. But if indeed you would cut that kill for a long period of time, you would have the risk of backing cattle up in the country. I am skeptical on that, Susan. I when you talk to employers, they are very reluctant. I mean, how efficient is this, right? To pay somebody to not come to work?
Yeah.
Or, they can go, well, we just might shut her down for a week. Sure. You think those guys are all going to come back to work? I mean, every business is handicapped by the inability to source workers, right? And so the packer needs to be viewed as a reliable supplier of product as well. He doesn't want to risk losing market share. My view is that when you get into a tighter supply deal, what changes is that the margins change. The packer had it his way for 3 years. He made ridiculous profits, right? Now it's the other way around. Now we tighten it up where the margin's going to give up from the packer, the retailer, and it's time for the producer to get some of those margins, in my opinion. So it should be a fun 12 to 16 months here as we work into this tighter supply period. And the weather's going to just speed it up if it stays this tough, for sure.
All right. Well, we'll dive all into that. The last trading week coming up next week. Appreciate you joining us this week.
Like it as always. It was a fun day today. Wow. Good day for the bulls, right?
Very much so. Well, we wish you and your family and your staff a very Merry Christmas.
Oh, thank you, Susan. And to you and yours as well. Have a Merry Christmas.
All right. Brad Kooima has been joining us today. And as we always remind you, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's been today's Cattle Call on the Rural Radio Network.